right, y'all. So here's one view we can look at. All right, so look, we got the top of this wick right here. All right, we can break it down to this wick. How about this? Let's do this. I'm gonna show you where I'm gonna take it from. Right, I'm gonna take it from this top. Right, and this was the lowest. Right. So then we had 2, 3, 4, 4 candles moving sideways, and then on this fifth candle, it broke through. All right. Sorry for all the noise. Kids, birthdays, and all that stuff to everybody over here. All right. So look, this will help you out with your zones. You can do something like this. All right. So we do know that this is a box zone. All right. So then what you can do is now you can take your box. All right. Create your box, and then you can do this. Okay. And then you can delete your support resistance, or you can leave it there. Whatever's easier for you. Okay. Now there we go. So now this is supply zone. Why supply zone? Because this right here, this major candle came out and broke. Okay. Now, have we had a retest of this zone yet? No, we have not, but we have had a continuous drop down. Okay. Now, what's happening right here? So we also have another area that's formed. We have rejection right here. And of course right here as well too. Now, if you look to your left, what do you see? You see that this was an area that once was some form of support. It broke, it came back up, retested this support, which is now resistance. So remember, anytime support is broken because of the resistance. So we do have that right here. Right. So now we're in this particular range right here. Now, are they trading opportunity? Yeah, because if we go down to the lower time frame, we'll see. But if I'm looking at this, I know already we see some form of a rejection candle based off of this level. Why? This has been an area where 1, 2, 3, and then possibly, well, really 4, because on tomorrow when the market's open, it's going to open right here, and we're either going to go up or we're going to go down, regardless. But regardless, that's 4 candles in this zone right here that is saw some form of sell pressure. So you can do something like this if you want to. All right, we know that this is an area that's having a hard time. All right, break it through. Okay, now let's go down into the lower time frame and see what's going on with this little setup right here. So we can go down to the 15, or we can go to 30 minutes. All right, so matter of fact, let's go back on the 4 hour first. And let's do this. Right, I want to see these areas. All right, let's do this. All right, let's do this. All right. All right, so this is what we're dealing with. So this could be an easy a setup for tomorrow where we really would just want to watch this level right here and see if it breaks. It's a little minor area right here, but for the most part, what we want to do is we want to actually measure this whole entire move. All right, and so we want to be able to do this. And let's do this. Let me turn the music down for y'all. All right, so we got our Fibonacci retracement tool up. We got 61, 78 area. So we know this is a zone where price could come back to based off that impulse. But nothing is guaranteed. But this is the zone we want to see violated. So now you see this. So we're accumulating. We're moving. We want to see a break. Although this is in the way, I mean, it could act like a support zone if we break and do something like this, then that, So keep that in mind. But to me, it's not enough in this zone to worry about that as a key area. Now, looking back further on the chart, these areas could still hold true. So this is where you see a lot of bounces in the market. You know, you were like, why price turn around right there? All right, well, this is a key level of resistance one point, but now it's a support level. So price could come down here and do something like this and then drop, or bam, 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 here, or whatever, right? Thousands of ways that the markets can move. But we don't want to get caught up in all that. So that's why we go on a higher time frame too, try to eliminate some of this noise. Because what'll happen is the further you go down on a lower time frame, you start seeing other levels to where price could turn around at, and you'll start second guessing yourself. So we definitely don't want to do that. So we take in the bias, we look and see what what all the orders are. We also make sure it lines up with our analysis, etc. All right, now let's do this. All right, here we go. All right, so this area right here is a demand area. All right, look, this was supply up here. Why? Because this is where price ultimately dropped. Let's get rid of these, get this off the screen. All right, so look right here. This is on 15 minutes, of course. So this whole entire area is once an area where price did drop. So you see how we dropped out of the zone, then we come back in here. So yeah, this is considered a supply zone up here, right? But you see how we went on certain time levels. I mean, not time levels, but time frames. And we've seen where we basically want to mark off our support and resistance level, and we'll play it from there. Because you just jump in and go short. Yeah, you could do that, but you also get caught up in a ping pong back and forth. We don't want. We want more confirmation. So for me, like I said, I like the fact that this. Now, if you want to be a lot safer, you could do something like this, and you can eliminate that zone, and you can say, hey, if it breaks this, I feel more comfortable going short, because you know that now it's below this level. So you do know that even though this level may be broken, this level can be found a bounce. Okay. Now this is what it's going to look like, because I already see it on here, and all these bounces aren't going to be perfect. But what do you notice right here? Right here. Look at this. Now watch this. All right. Okay, what happened? Price broke, came back. What did it do? It bounced. All right. Remember, support and resistance is just not a defined area, it's a zone. Okay, that's why we like to draw boxes, really. All right, so this is a zone. This whole zone hold up, but look at this. All right, it pierced it, came down, and then it went up, and then ultimately it got down here. All right, this is what we do not want to see over here, guys. So sometimes that do happen. You be like, oh, I was gonna go short, I was gonna go all the way down here. Like, yeah, but look left. You might get something like that, and like that, and then that. All right, and that's exactly what happened over here. All right, you got the little break. You know what I'm saying? We got a little boom, bam. Like, this is it. I'm in, I'm good. You like, oh, you mofo. And then bam. All right, so you see that, right? So, in all, you may come across these things. So, for me, um, I like to trade structure to structure. So, if I am going to enter in on this, I'm only going to take the trade right there. Sometimes it'll go a little lower. Sometimes it's blast through it, but that's just playing it how it is. Meaning, not looking left. All right, I see that. All right, but let's go on this higher time frame thing, and let's look at something. This is what we this is different. Now I don't care about all this ping pong back up in here, is because watch this. All right, look at this run up right here. Okay, if we would have came in here, all right. I'm glad we're doing this because this is what we need to see. All right. Uh, Here we go. We do this. All right, and we want to. We want to take it to the what? The 61. All right. Price a lot of times can go lower, guys. All right. We can do it all the way to the 70. This whole entire zone where we want to trade to, right? And then this is what we're gonna do. We're gonna get it to here. All right. Let's do all right, about 407 pips. Okay, this is what we're looking for. Okay. Now, some people have their other target down here. To me, I don't like to come down this low. I like to use my field levels because I know at least these levels, if price do move, it's going to at least try to come to these levels first instead of trying to come down here. If you're swing trading and holding the trade, right? All right. So let's put some, key levels right here. All right. Look, when we close above here, below here, all right, we're looking to take some trades. All right, we're on a 4-hour chart. Um, let's say, for instance, your stop loss is way up here, which is ridiculous, but it could happen. 148 pips. Let's say you took $1 outside. That might be decent because you're getting a 400 pips down here. So, that's almost a 3-to-1 for every $1 you risk it. You can make three. So that's pretty decent. And if you took a standard, you know what I'm saying, you're going to be able to lose up to $1,400 to make basically 4,000, right? But there's ways if you can scale into the trade without, all going all in on the entry, right? All right, so this gives us a signal that we're looking to get in. Now, here's the thing: just because we broke this level here, it don't mean that all this is not what it can be visited again because that's nothing but a retest. All right, if we do get back up here, it can. So let's see. What do we get? Retest. All right. So you see what this does. All right. We broke, but then we got this retest up here back in the structure. All right. This is what you got to look at. Now, why do we turn around right here? Remember what we say, look left. You know what I'm saying? This zone. That's why I want to be a little careful when I'm looking to your left. You're like, yo, these some key areas. Okay. So look, on a lower time frame, I'm pretty sure if we go down here and we look, we'll see some areas where we could have got in and got short, but we would have got out right here. That's why I told you I like to just trade structure to structure, because all right, let's see this. Look at that. That's about 72 pips. We would have got out. All right, so we'd have made some money if we was on a lower time frame and we was looking for this setup, because we would have looked left and we would have saw all this mess over here. Like, all right, I got you. All right, now someone can do that, and now they can say, look, by the time I do all this now, I'm out. Because look, when this was violated, somebody could have went short. They would have been up massively, but then they would have been maybe at break even. And now we need to see what the market's going to do after this. Okay, so now they're back in their favor. All right, we're good. All right, both people are good. If you got in right here, you're good. If you got out and then you got back in right here, you're good. All right, we're good. But should we take profit? Where are we at? Near structure. All right, how many pips is that from right there? All right, 66, 63 pips, okay? Watch this zone. Make sure that we don't get a retest, but we could. All right. Anybody now that's new to come in the market, they could do something like this. And you see how we're just playing a levels game. That's it. We're just trying to keep it simple. What happened? See? What so guess what? If we came into the market, what did we say? We want to watch this level. All right. If it broke, you could have taken this breakout. Why? Because you would have looked left, and that would have been your target. So let's go on a bigger screen. So watch this, guys. That's 36 pips. We'll take that. All right. You getting out. We don't care about if it's trying to go up here. No, we're doing structure. We're getting out at structure. We'll do that. Now, guess what? You can tell yourself, I ain't doing nothing because I'm really going for a bias to the downside. So you don't care about all that. But what you do care about is this. it may give you another incentive to say, now I don't have to try to wait to this break. I'm gonna go ahead and get in now, and I'm maybe gonna put my stop loss above here. So let's see how that goes. All right, so you're in the trade. Your stop loss is above here. You're in profit. Let's see what goes on. Okay, you're doing very well now. You're good. Now you're ping ponging all back over the place now, which is fine. And guess what? If you go on lower time frame, you'll see structures where you can get out. But if you want to hold, you're holding. You're good, and you probably can even add to your position. All right, but we're good now, right? We're feeling real good. All right, now you remember your stop loss is way back up here, but now you probably say, shoot, I'm gonna put it right here. You know, we play ball now. We're good. Matter of fact, let's see how many pips we up now, because we got in up here, down here. You up 134 pips. All right, good job. We're good. All right. What it was? All right. So let's see. Okay. So our first target was hit in this area. So we're gonna come down here. We're gonna measure for where you got in up here and down. So all right. So we're 290 pips. And remember the other what did we enter in the first time? So let's say you did get in right here and it pulled back that many pips on you, but you stayed in trade because your stuff is above the stop loss. All right, you are still up 200 and something pips on that one. All right, let's play. All right, so our targets were hit. This bottom one was a little suspect, but it didn't get there. But it got close, but we didn't get. That's why I don't like to take it that far down in there. But you see how our levels hit based off our fibs. Man, we are good to go, right? All right. So you see how that worked. Now, guess what? What we're gonna do right here? We're gonna measure. All right, now we're gonna be careful. We're gonna make sure it gives us a reason why it's turning around. It may keep going up. All right, so since it keep going up, I can do this until it gives me a significant correction. All right, you see how I keep doing? We're not in a trade. We're not doing anything. Okay. So these are the times where you feel like I'm missing out. Nah. Let the thing set up. All right. So we got a little periods to the 23%, and I come out with this 23% strategy a little later when I really got some stuff fine tuned and kinked out. Y'all really gonna like it, and it's gonna really improve your stuff. So typically when we cross that 23, we eventually probably gonna go down at least to this area. So we're going ahead and hook y'all up down here. We'll do that. So far, let's see what's happening now. Okay, here we go. So look, we're not doing anything. We're not doing any trade. So guess what? That is negated. This is the next 23. We want to see this area violated. So once again, you still could be like, yo, I'm missing pips. Well, no, we can get in. We can look for some long opportunities, but you can also be patient and be like, yo, I'm just waiting for the ultimate setup to come back down. And that's fine too. All right, here we go. We got an event. All right, but we gotta be mindful. We still could ping pong. All right, but we got an event. All right, so that signals that we probably was going to try to come down here to this 61% zone between the 70. All right, let's see what we're talking about. Remember what I said. We're gonna come back, try to come back across. All right, let me take this off. Now I'm about to put y'all on some game. We can do a fib within a fib. See that? Bam. What happened? Price came back to what? The 61% in this area. So you could be looking for what? Shorting opportunities based off of that. So you would already be looking to get in a trade. All right. So we're in the trade, and we're in the trade because it crossed this again. Now we're in the trade. It's like it's not, stop loss is way up here, but once again, that's steep. We on the 4 hour, right? So if we want our stop loss to be a lot better than that, We're gonna have to go on a lower time frame. We got to see what's going on. Okay, so we're good. We're in trade. We're protected now. We're in good profit. We're back at a little bit negative, but now we're back in the profit again. So you see how that ping pong happened? All right, now you're negative. Now you're back in profit. You see how I keep ping ponging back? That's the only thing I hate about that. Right. So, but guess what? Guess what happened? We did a fib on this one. We did this drop here. I bet you this is going to be a fib. So you see how the fibs can really help you with these trading zones. Or what happened again? Look at this. So look, 23%. It crossed over and then it came back down. When I said it gives us a higher chance, it's going to go to the what? The 61, 70, and it did that. So guess what? Somebody could have did a what? A hedging, and they could have took this trade. That's over 100 something pips, 103 pips to that area. It's crazy, right? Right. But what I told you before is that price keeps dipping back below. I got to find out the key levels to this. So that's why it hasn't been rolled out as a full-fledged strategy yet, because I'm still doing all the back testing with it. But if any of you guys find out something about it, let me know. We make it speed up the process. But for some reason, it crosses the 23%, then it comes back down either sometimes multiple times or one time. But for some reason, it does. But what I can do is I could try to find out what is the field levels that this is maybe revisiting on a smaller time frame, and that may give me a clue. But it's going to take me a lot of data, like over 100 something trades. Okay, so I got to do over 100 something trades back testing this to see how it works. But for so far, we got the 23% signal down pat. It's just all right. So, but there's other things we just need to figure out. All right, boom. All right, came back up here. If you want to take this trade, you would have made money going up. All right. Wow, this position would have been, like I said, ping pong. You'd be like, oh my God, I went short. Now it's going back up. All right. So you're hedging, or you can say, you know what, I'm gonna set my stop loss up here. I just took an L. I'm out. I'm cool. You know what I'm saying? We find another setup. All right. Here we go. Oh, now, all right. So we got in. Now, if you want to go short down here, the question is, where do you get out? You got up here, you shorten it. Remember, we're getting out at levels. Okay. You would have been getting out at these levels. All right. Even coming down here, you would look left. That's a level. You possibly could have got out here. But this is the danger of just holding. All right. So watch this. Let's say you got in up here for whatever God reason you got up there, you got a short. You just knew, all right. You just knew that this was the shorts of shorts. This is what it would have looked like if you would have held. You would have been up 2,000. If I mean 261 pips, all right. Only to now be up 44, 45 pips based off of this. And at one point, almost a little bit negative, maybe a couple of little pips negative, if you would have been holding on. See, that really hurts your emotions, right? That really does, because it's a lot of going back and forth. Can you really handle that, right? It is a little difficult. So we typically create a swing trade account where that's the only thing it does. So we don't even check it. We put the orders in, you put the stop losses in, like, bro, it is what it is. And you really don't check it that often. You may look at the chart, but we try not to look at the account because you get messed up. So imagine if you got a standard lot size and you up $2,600 something dollars, and you come make a check and you only up like $10. Like, you're like, shoot. And then now with just 40 something pips, you up $400. You get frustrated. So we ain't even looking at that. All right. But at the same time, I like to take profit on the way down at different levels. With that, so that's a little better to me than the swing trading. You just swing it to the next level. You get out, and then if it gives you a reason to get back in, so you can play the game on the way down. It just takes a little bit more discipline to do that. All right, so let's play this. All right, now what was this? What are we doing? Nothing until what? That level is broken, violated. We get a nice break. All right, what we're doing right here, we're getting out. Why? Because that was an area to get out at. This was an area that was what? Resistance at one point, broke, came back. Now this area is resistance, now support. Came back here to the support area, and we bounced up. But we can look for what? Entry to go short. Why? Or get out because it's coming back. You see how the levels that we keep visiting? You just got to keep your eyes open and peeled so you see it. All right. So this level and I got now. See, this one you really be pissed off at. Why? Because remember, if you just got over here and you hold it, oh my God, you just got your stop loss hit. Now imagine that. Imagine that. You was up two something over $3,000, $4,000, and then now and you know took. And let's say you say, man, I'm gonna give myself 100 pip stop loss or something. If they just move 147 pips, so you just lost $1,000 when you was up four. That happens to a lot of people. That's why I don't really truly believe in all that holding so long on the swings. I believe in holding and taking to the next levels that make sense, getting in and out. But yeah, this would hurt. All right. Look what happened. This level came down here and this level held. Why would we be going short right here? There's nothing to go short about because it's still back up into this zone, this area. It's fit. Now this is a final shakeout that we got. All right, now we broke to come back down. So now we're looking for what? This level to break. We got it. You know, we good. And guess what? We got a retest. All right. So we're looking for this area. Okay. Um, but this the zone. And we can play ball and we can go back and we can look. All right. If we violate this, we got this. We got these little things just sitting here. Okay, that's gonna be in a little way while we come on down. All right, that's about 65 pips. We'll take that. Even we come to right here, that's about 90 pips. I'll take that. But we really want to come down and break and get into the zone. All right, so then that'll be about 188 pips. All right, and if we can get all the way down to this part, which I don't know, it's gonna be a little stretch to get there. But this is the one where I was telling you we're looking at over 300 something pip drop if we can get all the way down here. But that's a stretch because we already seen what happened before. So I wouldn't be trying to hold to get down here. But this is what I can do. I can do what? Measure this whole impulse, and I get my levels. And what happened? Came up. We crossed this 23%. Okay. Now, don't be surprised if some stupid stuff like this happen. You come back up here again and then do something like that. Like you gotta be mindful that could happen, right? So where we want to come to, we really want to, like I said, the 61 through the 78. So this is a zone where price can come back to for sure that we're looking for. And like I said, I would want to see something coming down this area. But I am mindful to keep an eye out that level has to hold. All right. So I know that might have seemed like a lot, but we'll keep practicing over and over. But yes, find your supply zone and your demand zones mainly on the 4 hour. It'll help cut down on some of the noise. So you got something like this. We see this ping pong. We got a fake out down here. You got a fake out down here. A little fake outs, and then finally we get the moving. But that 4 hour, and even if you do have what we so-called got fake outs, there still is a significant amount of movement where if you went on a lower time frame, you can see it. I mean, that's a 120 pip move. So you know what I'm saying? It's hard to get faked out on 120 pips. You're like, oh, okay, I see what's happening. I see what's going on. These are the areas that it can get to. But yeah, so do that on them. You can look right here. See how we got this area right here. All right. We dumped out. Look left. All right. It came to an area. But watch this. Let's take all this off. We got a nice little impulse, so we can measure it and we can find an entry to maybe take it down to what? A field levels, and look at that work of beauty. Now, when you stretch this thing out, it looks totally different than what I just had on. Look at that. Look at that. Perfection. Between the 61, 70, and 78, price came beautifully back down in there. All right. Look, came back above the 23%. All right. But watch this. Let's do a field within a field. You got a drop. Watch this. I'm going to take it from the top down to this bottom. Right there. And look what happened. Came to the what? Between the 61 and the 70. Perfection. Look at that. Look at that. Look at that. We can play this game. If you play this game correctly, bam. All right. We're looking to what? Get out. Okay. Once we got up here moving, we got out. All right. And then that dropped down to here. Okay. So we just did a field within a field. And this is called confluence. Okay. All right. So you can practice with that. The video for the Fibonacci is inside the document that I sent you guys on Telegram, and I will email that out later this weekend as well too. So you can play around with that. But for the most part, you can come on to a 4-hour time frame and just start playing around. Now, look, this wick is ridiculous, so I like to just put it into the body when it's something that crazy like that. And we got a crazy little wick right there. So you can come do something like this, which really right here because of this level right there. But this is a double bottom. All right, so be mindful of this setup. All right, we might can push back up in this area. We have to revisit this little area that's broke. All right, so we can come back up before we ultimately make that drop. But yep, this thing is setting up where we could be in a huge bear flag. Let me go on a daily to try to knock out some of these candles. And this will be the end of the video. I'm not going to keep y'all long. Let me go on. Let's do an 8-hour chart. Let's see how that looks. All right, that might be a little better. Also, if you want to change your hours, you can go on different things. So you go here to the hourly. You just see where it says add down here at the bottom. Add. All right, I can add whatever time frame. So if I want to do, let's say I want to do a 5-day chart. So I put 5-day chart, and I hit add. You see where it says right here 5 days. So this chart now is 5 days. Now I do not know if this is available if you don't have the premium. So I have premium, so I may have that privilege to do it. You may not, but you can test it out and see. But yeah, let me go on a 3-day chart. And if you've never seen a bear flag, I'm about to show you. All right, see that bear flag? Bam. All right. So what does it look like? Bear flag. And so we are talking about measuring this. Okay, let me do this. Flag. And I really believe, guys, if we all could play our cards right with UCAD, we all can be real good going up into December. All right. All right. So this is the target area. Now watch this. Let's take the low from here up to this high. All right. What do we? All right, we done crossed 23. We done get back up. We done crossed that 23 once. All right, so right now we're back at the 23, fighting with resistance. All right, we could start getting a drop, but look, between the 61 and 78, this is where we want to see price come back down to, get in this area, and guess what? That lines up with what? Confluence. All right, so that zone lines up with confluence. This flat pattern, if it plays out, gets us back up into this area, and we ultimately, good God about it, 2,289 something pips. Standard lot size, you're talking about over 22 grand. Good God about it. Yeah. Yeah. This could be, like I said, guys. Sometimes if you set up, you do this thing correctly, you get that. Like I told you before, it's a lot of times this is hard to really be holding stuff, man. So watch this. All right, look, we got this flat pattern right here, and it dropped. But then look what it did, all this craziness right here, bro. Like somebody really could have, you know what I'm saying, took this trade. All right, they would have been up, you know what I'm saying, 1,412 pips. But then if they would have stayed in, it would have went against them 1,121 pips in the opposite direction if they would have just held. So that's why sometimes it don't make sense to just hold something all the way through like that. Like you need to really get out at certain levels. But this is a lot of opportunity to take a lot off the table on the way coming down, and that's for sure. But that did play out. Now watch this. We can do different types of targets based off of measuring using our extension tool. All right, I can take this whole move, bring it back up. All right, so these are the next target areas. And guess what? Line up with confluence right there, back at the golden ratio area. So this is a lot of things really shaping up to give us our targets to the downside. Of course, these are the ultimate targets to the downside. But yeah, this could happen. So if we play our cards right, that's why I told you sometimes the best is just focus on a few pairs. If we can focus on this, we really can make a lot of money coming down where everybody else is complaining about everything else. Like, nah, we just did it. And your taxes are totally different with Forex. All right, you do a 60-40 split. I promote all that information later. And you're not really have to worry about all that right now, but I'll explain it to you. All right. Let me measure this impulse and see if anything already happened. All right. So based off this impulse, this level is next, getting close. So at least this one be hit first. All right. And that's really almost the level of the last one too. So that's a good thing. We could have did the same thing over here and watch what happened. You would have measured impulse, bam, bring it back up, and voila, almost every area hit. One, two, that one almost got hit. All right, but it's getting close. All right, but you see that. Now watch this. Now, this is a 3-day chart. I can do a what? Fibonacci what? Retracement tool. Bring it all the way down here, and what do you have? You have all these levels being hit. 61 golden ratio up here to 78. These levels are being respected based off this. Now, it might be a stretch, but let's see what it's going to look like with this. There could be a 71 cent level that we can see based off of this. If that is true, which it possibly could happen, which will actually be great. So 5,815. This would be great. This would insinuate that the dollar is losing strength, and that's what we really want. We do not want no strong dollar. Okay. Now, how can we sense this? Okay. Now check this out. All right. From August to 2002, all the way to November of 2007, the Canadian dollar was winning. The Canadian dollar was winning. All right. Yeah, the dollar had its valleys and stuff, but from this, that's a long time. You know, what is that? 5 years or so worth of dominance. Okay, and then what happened? The dollar had strength from 2007 all the way to 2000 March of 2009. So it's about 2 years and change, and then once again from March all the way down to August 11th for another 2 years. This had it. So we see what's happening, and then right here from April 2020, CAD was just killing the dollar, and then on May 21st, May 2020, the dollar has just been reigning supreme up until now. And is it now time for the CAD to get back in? And we have a double top. All right, we got a lot of stuff shaping up to show that this this CAD can gain some strength, man. So let's keep an eye out on this. All right, this is another one too. It's a triple top. Gotta look at. In fact, let me look at this and I'm gonna get out of y'all way because it's getting a little too long now. Yeah, let me see this. Yeah, this is what we call a sensor pattern, whatever. But yeah, this is a big, huge range before we got the drop. Yeah, that was real good. Oh yeah, that was real good. Nice little retest and drop. All right, so yep. All right, hit the like button, subscribe. You have a great night. Enjoy the weekend and trade safely tomorrow. Stick to your plans. And overall, remember, we want to trade structure to structure, but safely. All right, peace.